Hello, Ghost Traders. My name is Angelique with Ghost Trades, and it's time for your market update. We are officially at the end of Q2, and the first half of 2023 is officially over. Now, speaking of the end of Q2, there's something called quad witching or quadruple witching, and it's a significant event that occurs on the third Friday of March, June, September, and December. So it just happened on June 16th. Now, during quad witching, four different types of financial derivatives: stock index future, stock index options, stock options, and single stock futures, they all expire the same day. Now, with all these expirations all converging, you're going to get increased trading volume, heightened market volatility, and some crazy price swings can happen. Now, while yes, this does happen and it's completely legit, the hype behind it tends to be more than it actually is. Now, again, think about it. You have the simultaneous expirations of all these derivative contracts causing a ton of large-scale trading activity. Now, traders are just their positions or they're rolling their contracts. And if you're going to trade during this time, just know that while this can be, actually create a bunch of opportunities, it can also create some risk. So this is why you do your due diligence and you learn how to navigate this market. So at the very least, quad-witching days are something you want to be aware of so that you can monitor things a little closer and watch for more significant fluctuations and some increased liquidity across the markets. Now, understanding the impact of quad-witching and staying informed about the upcoming expiration dates can be valuable so that you can make informed trading decisions. So, as a rundown on the impact of quad-witching, overall, volatility is slightly higher. Volume is definitely higher. And while quad witching week is bullish, the day as well as the last hour is usually bearish. So those traders, in the name of organization surrounding your trading, go to that calendar and make an entry for at least 2023 and 2024. And here are the dates for those. So in 2023, your calendar entries are 15 September and 15 December. And then for 2024, your calendar entries are 15 March, 21 June, 20 September, and 20 December. And it's a good practice overall to choose one day a week, every week, to go to your calendar, look 2 weeks forward to be prepared for what lies ahead, and then 1 week back. This way you can make sure you didn't miss anything. And also this way you can be prepared for whatever this market dishes out and therefore make informed trading decisions. Now next, the S&P 500 and the NASDAQ Composite are both up considerably for this first half of the year. And in fact, the NASDAQ has had its best first half of the year since 1983. Additionally, communication and the tech sector are also up. However, I'm being a bit cautious because I personally feel they're a bit overvalued at this point. And I have to point out, it's at a time and people are still buying. Not necessarily normal, but it's happening. So something else to keep an eye on. Now, last week, the Supreme Court wrapped up the last week of their 2022-2023 term with quite a few decisions ranging from student loans to voting. And as for earnings last week, let's go to the Ghost Trades platform. And we're going to go to our calendar here and go to June. So here we have Carnival earnings. They came out on Monday and they did pretty good. We had Walgreens on Tuesday. They actually missed their earnings for the first time since 2020. And then on Wednesday, we had both General Mills and Micron Technology. They both did well. On Thursday, we had McCormick, which came in better than expected, but both Nike and Paycheck missed their marks. And then on Friday, we had Constellation Brands, which is Corona Beer and a few others, and they missed their earnings expectations as well. So last week's consumer confidence had better than expected earnings, better than expected data early in the week, and new home sales were also up. And additionally, Q1 GDP growth came in higher than expected on Thursday, and initial jobless claims also had a big drop, making for some overall positive data. Now, the PCE report also came out on Friday. This is a report that deals with personal consumer consumption expenditures. Now, in other words, it measures the changes in the price of the goods and services, not counting food and energy that we, the consumers, purchase. Now, it's also one of the primary statistics the Fed uses to measure inflation. Well, it came out as expected at 0.3%. Now, additionally, on Friday, personal income month over month came in a bit higher than expected, but personal spending month over month came in a bit lower than expected. And here's something to think about. And not many are really talking about this, but even though employment numbers are strong and wages are up, consumer spending is not the best because our money isn't going as far, despite all this apparent strength that some are talking about. So I want to show you something. According to the Bureau of Labor Statistics, the hourly wage is up, which you can see by the blue line, but our purchasing power, meaning what the money that you get will actually buy you, is going down, which is the green line. So just something, again, to keep an eye on. As for next week, we have a short trading day on Monday, so don't expect much. We're just going to trade in the morning that day. It might be probably a little choppy at best. And then on Tuesday, the market's closed, and this is for the July 4th holiday, and happy Independence Day, everyone. On Wednesday, however, we are going to have OPEC meetings all day, where essentially 15 of the most oil-rich nations are going to be representing 40% of the world's oil supply. And they're going to get together and discuss production and the overall energy markets, and this has a huge impact on oil prices. Additionally, on Wednesday, we have the FOMC meeting minutes, and those will be coming out midday. We have earnings on Wednesday of just Levi Strauss and Company for the most part. That's about it to watch. We're not in earnings seasons just yet, so there's really not a whole lot of earnings to speak of for next week. On Thursday early morning, we'll have the ADP employment report coming out, along with unemployment claims, ISM services index, and JOLTS job openings also are both leading indicators of the employment and our economy, and those will be coming out as well. The market will probably be a little flat the rest of the day as it awaits Friday morning's non-farm payroll, along with the unemployment rate and average hourly earnings month over month. If you've never watched the market during these first Friday of the month announcements, it's a good thing to watch, and you can see some nice moves in real time. Again, with the half of 2023 officially over, a day turns into a week turns into a month turns into a year. What changes are you going to make now so that 2023 is an amazing year for you and those you love? Well, that's traders, that's it for the week. Get organized in life, surrounding your trading, stay safe in the markets by using good money management practices, and please make sure you contact us if you have any questions at all, and we will see you soon on our live sessions. So until then, happy trading.